Hey, it's Amy Nicholas. Welcome back to the channel. Today's video is about my worst investment thus far. And I almost didn't even want to make this video because it's truly just like embarrassing about the way I handled this investment and just didn't make the right decisions except for like one or two times. So Tesla is my worst investment. It's the one that's got me in the hole the most. And I've sold some shares like at the end of 24 to just recoup a little bit of like tax loss harvesting because I had gains, capital gains, short-term capital gains last year. And so I was like, all right, we'll unload some of the stuff I had in my one trading account. And I also have a swing trading account in Fidelity. And my intention was to buy these. I think I had started with 10, 12, 14 shares, something like that. In my swing trading account for Tesla right now, I have 8 shares. So yeah, I did unload a few. Some at a loss. I want to say some of them, it might have been a very small loss because it had a run up like, I don't remember, 3-4 weeks back. And I was like, oh, get rid of these, right? So I have 8 shares in my swing trade account with Fidelity, and I have, let's see here, in my IRA, I have 9.34 shares. I have fractional shares in that account because I was thinking I was going to dollar cost average after I had bought the initial lot of shares. And I think that one I had at one point 15 or 16 shares. I actually had even more invested, and I had bought really low. So I thought, and those were sold off at a profit at some point. Not very much, but at any rate, here's lessons learned and why this is like the worst investment. Okay, so let's just get into the red here. How red are we? So on my swing trade account, sadly, this one included shares I bought way at its highs, thinking that this sucker was going to 500. And I think you guys remember, this was not that long ago in December, Tesla was hitting 470s, 480s, and like, seriously, I'm like embarrassed that I bought this high. 483 was the highest I had bought at. I also have 480, 479, 477, 459, 466. All way, way high shares. And, it hit those highs, and it was like a bouncy ball. It just had to come back down, and it came back down hard, somewhere in the low 400s, I think, after that. And I was like, oh, shoot, well, whatever, I'll just hold and wait it out, right? And been waiting and waiting. So here we are, 2 months later and some. And that account, it's I don't have a ton of shares. Like, I feel bad for people who have a lot in this. I have 8 shares, like I said, and I'm down right now $1,417. And that's due in part to Tesla cracking below 300 today. It's at $298 a share. I never would have thought getting in it was going to fall that far from its November highs. Like, granted, yes, this is one of the stocks that ran up huge after, we knew Trump won the election. And that's actually right when I started trading, swing trading and day trading. And when I decided I was going to add to my IRA with something, something volatile and stuff, it certainly was. Learned my lesson. I just really didn't see it falling that far down, and I think a lot of people are in this position right now of like, oh gosh, how low are these stocks going to go? But if you have long-term investments, like what I have in my IRA, you don't stress as much about it because like, okay, first of all, I can't take the money out till I'm, 60, I don't even know, 65 and a half. Who the heck knows? Without a penalty, right? So you just hold. Secondly, you want to see the return, right? And so, as scary as it may look, logging in sometimes, you just have to ride it out. If you're in it, like, I'm the type that I'll set stop losses for day trades. I don't do it for swing trades and long-term investments. I've kind of stopped swing trading anyway, just found better, opportunities with day trading right now. But yeah, I get why people do have stop losses because, maybe you just bought in too high. Who knows? who knows what the market's going to do, right? So what's going on in the IRA? That one is, of course, more negative because I have more shares. But no, I take that back. It's actually less negative. That one I had bought more shares at the low 300s, 325, 330s. I think the highest one, let's see here. Ooh, I bought it like 467. Okay, so I did have some high ones in there. And I've told you guys this on the channel before, that my thoughts now about buying whole shares of stocks that are, like 100 plus, I just don't do it because I've learned my lesson thinking like, you think you're buying it at a fair value price, but you just don't know. There could be some crazy Fed news, interest rates, housing crisis, inflation. There's so many unknowns. And what you're really combating against is that people's emotions are triggered. And then next thing you know, what looked like a stable, growing stock or a great runner completely turns around. And that's where I feel like I got caught up in Tesla. It was like, okay, I'll just dollar cost average and I'll keep buying. And at some point in my swing trade account, I was like, you know what? I don't even want to dollar cost average it right now. Like I just completely stopped my automatic buys of it on the weekly basis. I think I was buying between $50 and $100 a week or something like that. And I was like, yeah, I'm going to put the money elsewhere. So the shares I had sold and stuff, I moved that cash into my Robinhood account, been doing the daily investments through there. And so, yeah, it was kind of like, darn, because I felt like I kept making the same mistakes with Tesla. I would buy in hoping to recoup, make some profits, and then it would go down, and then you're sitting twiddling your thumbs. And there was some times where I'd hold like a week or two and it would go back up and I can make a trade or something. But then that particular swing trade account, that was just when Tesla just turned around and never came back up to 400s, not like high 400s anyways. And then the conditions of the entire market have changed. So this is not the same happy-go-lucky, everybody's putting their money into stocks and, the market's roaring and look at these all-time highs. We've seen some all-time highs still, but I would say it's starting to get more few and far between, right, of what's going on. So, and one of my regrets too, again, like I said, the dollar cost averaging, wish I had done that instead of buying whole shares, because all this negative has come from buying entire shares of Tesla. You're spending $300-400, close to $500 a share, and that sucker moves a few dollars, like, shoot, like 10, 20, 30, next thing you know, you're down that much per share. It's no fun, right? It's no fun at all. So my strategies now for long-term investing is like fractional buying. There's no real set reason why I need to buy an entire share of anything other than like SCHD, because that's like $27 a share, 28. But other than that, like I just don't see the sense in it anymore. It's really worked out for me to do the dollar cost averaging and just take a nibble of the market at a time, because it's volatile, it's ever changing, and we're now starting to see these stocks that had made such great gains, they're turning backwards, right? We're almost at, let's see if I can pull up the chart here. So Tesla had its big run up like most of these big players did back in November, right? So going backwards, I think I have to look at a 6-month chart. Yeah, so going back to like mid-November with the election, this stock ran from, what's the gap here? Looks like 238, I think it was down, and then it had the huge run up, and next thing you know, we were like in the 320s, 310, 320, 340. So there's basically what's known as a gap fill. From a level of, looks like we're at 260, there's a gap, up to 280, and then there's another gap, which we're almost filling today, right in the we filled that. Okay, so 310, 320. Yeah, so basically today, as many stocks will do, especially when there's such a big gap, at some point, they will return to the scene of the crime, right? So if it has a huge gap where one day it open from like yesterday's close, like say the 240, whatever I said, and then the next day we're opening at like 280, it's got to come back most times, more often than not. That sucker is going to come back down to those levels at some point in time. Now, granted, it's taken it, what are we at? December, January, February. It's taken it 3 months to retrace back to that level. And so now our support is somewhere around 260. So we're at 298. It's not that far. Like, I've seen Tesla drop, 30, 40 or go up $30, $40 in a day. It's not unheard of. So tomorrow, maybe this sucker could be down to that the support, the former support, which is literally meaning that all gains on Tesla since November elections have been erased. So if we got in thinking we were going up to 500 like me, and I'm not saying it won't one day, I just thought it was going to happen sooner. And I didn't think it was going to go back all the way. I thought, okay, I understand, it's going to have pullbacks, it's going to come back to different levels and things like that. It's just natural. But to come back that far, it's just like, just shake your head like, well, thank God I don't need that cash. I don't need that money. I don't have to sell at a major loss or anything. It's just, it's just one of those things where you did something and you did something repeatedly. Like, I kept buying shares and I'm like, why did I do that? Right. So yeah, this is my worst investment right now. And had I made this video, a month ago, like, it wouldn't have been so bad. I think we were at the beginning of, February. It was actually in the 400s, mid-January. Yeah, low 400s. I think it had a couple of heydays there. So it wouldn't have been so horrible. But yeah, I mean, when you're down freaking almost $200 a share, that's just no fun, right? So, yep, this is the big one, the big loser. But you know what? When I bought it, I was like, I want to hold it for a couple years. Like, I'm not stressed about the IRA part. I think I'm more annoyed at myself for the swing trade account, because that money could have been put to something that actually was going to make money, right? And even just for my day trading, I could have used the funds just to add to my day trading account. So, it is what it is. I think any money you put into investing, trading, whether it be swing or day, just make sure that money is not needed. Like, you don't need to pay your rent or your mortgage with that money. You don't need it for bills and groceries and things like that. Make sure that you are completely unattached to money. And like, historically, okay, when I first opened an individual trading account way back in 2012, I think I put something like $2,500 aside. And I was like, I don't need this money. I want to grow it. I want to start investing outside of my, retirement account. And I remember just being completely unattached, and that money grew. Like, I was so happy that I wasn't attached to it, because I didn't feel the loss, unrealized loss of when it was down. And it just was like, I'm holding. And some of the stuff I held for like 9-10 years in that account. So, yeah, who knows with this swing trade account, that's the only holdings I have in that one. But yeah, we all live and learn, right? So maybe you guys are in Tesla. Let me know. Are you super negative like me? I can't see that anybody is positive really at this point, unless you bought pre-election. And who knows, there's probably some people watching that did that, and you were bought in somewhere in the 200s. And if so, if it were me and I had bought in the 200s and I saw that thing falling now below 300, I would cash out. I would get my profits and run. Because right now it's very uncertain how low these stocks are going to go. They're crashing through levels. Like, look at Meta. Look at, even Walmart, was over 100. Now it's, who knows when it's going to go back over 100. It's hovering in these 90s, but I don't foresee it staying there. I'm feeling like that's going to reverse too. Amazon, I'm pretty dang sure within the next couple of days, Amazon's going to be below 200. Like, I just can sense, sense that we're not going in the right direction here. It fell from 238 before earnings. Now we're down to 210. That's a big freaking move on Amazon for such a short period of time. I mean, their earnings were just, I think it was the end of January, like January 31st or something. So we're just, 3 weeks away from when that happened, and that stock is already down that much. It's just a sign of the times, So good luck with your all trades. Comment down below if you got Tesla. Let me know, are you in the green or the red? And I'll see you guys on the next one.